Blessed Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce, here to bless y'all with another video here on Blessed to Invest. And before we get into this video, let's take a quick moment of silence to look at this market. This market has been crazy. Today was a bloodbath. Yesterday, last Friday was a bloodbath. Today was an absolute bloodbath. 4% down on the day? Oh my goodness, that ridiculous. But anyway, let's get into the video. Today we're here to talk about candlesticks, why the strength of candlesticks matter, and what type of candlesticks you will be looking for in certain type of situations. This is just a little detailed version of candlesticks. I did a video previously. If you didn't watch the first video, go check that video out first before getting into this one. But this is like a part 2 of that video. So let's get into it. Candlesticks, the strength of candlesticks, and why wicks are so important. So first and foremost, if you didn't watch the previous one, you're probably wondering, what are wicks? Wicks are these long poles here that come out each side of the candle. So you can see this line right here. This is the top wick. This line right here is the bottom wick. Same with this one. This line right here is the bottom wick. This right here is the top wick. And understanding the size of the wicks versus the candle, this body portion right here, the square, understanding the length of them, how long they are, and what they mean can really help you in determining the direction of a market. So for example, let's look at this over here. Give you a good example of one of the longer wicks. So as you see right here, this wick right here is pretty long. It's a longer wick. As you can see, like this one right here tends to be a little shorter. This wicks right here are non-existent. The wicks right here are very short wicks, very short wicks. And you can see on these longer wicks, what that represents is buyers in this side right here. Buyers, sellers came in, they pushed the price all the way down, and the buyers aggressively pushed it back up. Same with this. Sellers were able to push it all the way down. Buyers pushed it back up. Sellers pushed it all the way down here, and buyers pushed it back up. And you're probably wondering, what does that mean? What does that have to do with anything? That means that at that given price, the market has rejected that level. And what does that mean for you? If somebody has rejected that level, let's say you're in a negotiation and you're trying to buy a house or a car or something like that, and they say, no, I don't want that price. That price is not acceptable. I'm not willing to sell it to you at this price. I'm not willing to buy it at this price, etc. That means there has been a rejection of price, and the market says this level is not good. We need to find a new level to trade at, because whatever level we tried has been rejected. And that's what these wicks, these long wicks, are demonstrating, that the price has been rejected. It doesn't have to, the rejection doesn't have to last forever. As you can see in this scenario, it rejected for a day. It pushed up to find a new level, and then it fell right back down. It can happen a day, a week, or a month, or it can last forever, where these rejections are just in place. But that's what that means. When you're having those longer wicks, it means price has a rejected level, and we need to find a new level to trade at. So in the scenario of us as traders, when we see these longer wicks, where we see these clear rejection levels, we can say, okay, the market is telling us something. It's telling us that we need to discover a new price, and it's probably going to trend up in this scenario. So it came down and it pushed up. So it rejected this level. We need to find a new level. And what does the market do? It tends to push up. And you can see these 2 green days, it pushed up 4%. And it's showing we're trying to find a new level because it rejected that. Same thing with here. It rejected this level, it pushed up. We had about 5% return. Same with this. It pushed up, rejected the level with the long wick. And then we had another, was it 7% return? So that's what wicks are showing you in this scenario. Those longer wicks, it's showing you that it's rejected the price. Buyers and or sellers. If this happens in reverse, this can also happen in the reverse way, on the opposite direction for the candle. But it's telling you that whatever happened, the price has been rejected. So that is a signal for buyers or sellers for that market. The next one, candle wise, that we want to look at, wicks, is this indecisive candle. You see a lot of these where it's a very small body right here, very small body, very small body, very small body, very small body. It's a lot of these on this chart. That is going to be your indecisive candle. That is where the price is not sure what it wants to do. And for those type of candles, I recommend not taking trades at that level, because the market isn't giving you any information. It doesn't know if it wants to go up. It doesn't know if it wants to go down. It's just kind of hovering and trying to decide, okay, what's going on here? We don't know. You're kind of sitting in limbo. So with these type of candles, I don't recommend taking trades, but it does still give information that the market is trying to determine where it is trying to go. And you see a lot of these candles. 1, 2, 3. This one not really as much, but a little bit. It's just trying to figure out what's going on. And you're going to see a lot of these candles and try to figure out what's going on. And that's basically what this candle is. It's questioning what's going on. That's the feedback it's giving you. If this candle is saying, okay, we're rejecting this level, this candle is saying, okay, I don't know what's going on. We're trying to figure out what's going on. So leave it as that. The market is trying to figure out what's going on. This very next candle you're going to see is these long, strong candles where the wicks are really small. As you can see, the body is really big. Those are your directional, we know what's going on candles, and we know what direction we want to take this in. So this is representing the sellers. The sellers are coming really hard. Everybody knows what direction they're going in. And this is just a selling type day. This right here, again, is a very aggressive selling type day. It's just showing that the sellers are in control and sellers want to push this thing down. And what information does that give us? It says sellers are in control. Simple as that. Sellers want to push this thing down, and it'd be best to continue to go short on these levels. Same with this day. Same with this day on these green days. Aggressive green candles, big bodies. It's just saying that the market is strong. It wants to go up, and follow the trend on that because it's going up. So that's mainly what you're going to see. The main 3 type of candles that you're going to see. You're going to see these big body candles. You're going to see the big wick candles. And then you're going to see those indecisive candles where you're trying to figure out what direction this thing is going in. So overall, when you put them together, the chart is going to tell you a story, how the market is feeling on each given day or each given candlestick in that given period. So when we put them together, this right here is more of an indecisive / buyers are pushing this aggressively up, sellers are pushed it aggressively down. So it's kind of an indecisive, yet people are rejecting certain prices. And then if we look at this together, we marry the two and say, okay, they're kind of indecisive. They don't want it to go any higher. They don't want it to go any lower. And then we have this strong green candle that says, okay, sellers have given up. They want to push this thing higher, and buyers have control. And then we have these multiple days of green days, strong green candles. And then we get into these red days where, again, this is still green. This is still a strong green because it came down and buyers aggressively pushed it back up. So that's still a signal of green, even though this is a red candle. It's showing that buyers are still in control because they're refusing to let sellers push this down. Same, this is more a little bit of an indecisive, strong red, and then it continues to push back up again with some indecisive candles and then a couple of strong green. So with this, the importance of understanding the chart and the candlesticks, how they work, is because it's all telling a story. You just need to be able to understand and read the story with the length of the wicks, the length of the candlesticks, the length of the bodies, how small, how big they are. It's showing you how strong or how weak a given time period is. Again, look at this. nice long wick, small body. This is showing you that price has rejected at this point. And then we have strong green candles throughout the week here. And what you want to do with understanding this information on the candles, you don't just want to take these series of candles and say, okay, I know what direction it's going because I saw the strong body. I saw aggressive pushback on the wick. I'm seeing long wicks in certain areas. What you want to do is take the information and marry it with some support and resistance levels, like the resistance levels I have marked out here. If you're not familiar with how to draw support and resistance, go check out my video that I made. Also, go check out some of the indicator videos that I made. You want to marry a couple indicators together. So you want to look at the candlestick. It's confirming that buyers are really strong, like with this one, really strong buyers. And then you want to confirm with, okay, is there a support level there that we can look at and see why they're so strong? And then also maybe you want to look at an indicator too to say, okay, the RSI is a little bit oversold right now, so it makes sense that buyers will be coming in at that level. So you want to marry all these things together to get a high probability trade and set up to properly position yourself in these scenarios on these trades. So that's the video for today. Just basically how to understand the strength of candles, how to read the candles, and why the wicks and these bodies are so important and how they determine the strength of a given day or a given candle. But that's going to wrap it up for today. If you have any questions, leave them down in the comment section down below. If you have any comments, also leave that down in the comment section as well, like video ideas, stuff like that you want to see next. And it's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed, and I'm going to see y'all next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed.